Hello traders, Corey Mitchell here. We are going to look at the continuation pattern in detail, mainly how to draw it, what exactly we're looking for. I'd say probably 8 out of 10 new traders that are learning this pattern make a few common mistakes, mainly because they're eager to get into trades. So they are looking for contractions in price that don't necessarily mean anything. So we're going to look at what a contraction actually is, what we're looking for, the criteria that it needs to meet, and we'll look at a few examples where we have good patterns. We'll look at a couple examples that are maybe questionable and what we do in those situations, and then we'll look at a couple that we just want to ignore. So we have LVGO. This has been on my watch list for a long time. As we can see, it's been a very strong stock going back here to March. And we had a contraction back here. This one's even clearer, so let's talk about it. What is involved in a contraction? So we need at least 2 distinct price swings to the downside. So we've been moving up. We have a move to the downside, a move back up, another distinct move to the downside. And in order for us to know that we've had a move to the downside and that it's complete, the price has to start moving back up. So at this point, we can't really know if this down wave is completed. So we wouldn't want to connect this low to this yo yet, because what if the price keeps dropping? So until the price starts rallying, we don't know if that is a swing low or the low point of the price swing. Same with up here. Until the price actually falls away, we can't draw this trend line. Or you can, but it doesn't mean anything because the price, you've just arbitrarily drawn it against a recent price. But until the price actually moves away from that point, we don't know if that's the top of the swing. So as the price action unfolds, it pretty much stays there. So at this point, you could draw it in there. But again, it doesn't mean a whole lot until the price falls away. So we have another distinct price move to the downside. Again, we don't know if this is going to continue to the downside, so we wouldn't have drawn this in yet. But once the price starts moving up, then we can draw that line in. We did have some sideways movement here, so it is showing that the price is respecting that area. So we could draw the line in at this point, because now we have the distinct highs up here. We have a couple distinct points along the lows here, and the price has started to move up off of it. So these are your criteria. You need 2 swings to the downside, then a move up after the second down wave, and then we're looking for a consolidation that is at least in the middle to the upper portion of the triangle. I definitely prefer when it's in the upper, like right near the top of the triangle or near the recent swing high. The contraction comes from the second down wave being smaller than the first. So this wave is smaller than this wave. We can see by connecting those points, we can see that these lines converge, or if we just compare that to that, it's smaller. So that's how we get the contraction. This shows that the action in it is getting squeezed. It means that we can have a smaller stop loss because the price action is getting less volatile. We've had these big moves. Things are getting digested. Buyers, sellers are getting more and more eager to see what's going to happen. There's lots of people trading in here, so you can see this covers quite a span, almost a month. Now, I don't necessarily require my consolidations to be a certain amount of time, but when you have multiple price swings, lots of people got involved in this area. Lots of volume was trading every day, and that's why we like this type of pattern, because when the price gets up here and consolidates, if it breaks out, likely, not all the time, but like it did here, is consolidated here. Once it breaks out, we tend to get people who, again, feel they're going to miss out on the party, and so they jump in. So LVGO consolidated up here. This was our first really nice consolidation. Let's talk about the consolidation a little bit. I typically start my consolidation when we don't have a lot of upward movement. Now again, this is going to vary a little bit by each trade because each one's going to look a tiny bit different. But for this one, we were still moving up. We had this strong up move. So this was the first 3-bar period where we really moved sideways. We didn't make much upward progress. We dropped a little bit here, then recovered a bit of it over the next couple days. So this would have been the consolidation that I would have been interested in. Let's look at our... We like to see the volume drop off during the consolidation. So here we have volume that's a little bit lower than the last couple of days. Not a huge drop off, but at least it's not increasing. And then we had another consolidation here where the price moves sideways, and could have even used all of these bars if you wanted, and then this would have been the breakout point here when the price popped above it. And again, nice decreasing volume there. Stop loss goes below the consolidation. So even though this is moving sideways and hasn't really done anything yet, not stopped out, stop's not really in any danger yet. So I have no idea what this trade's going to do, but over the long run, I know that trading patterns like this tends to produce profitable results. Over many trades, over a single trade, if you just take one of these patterns, who knows what the result's going to be. But over many trades, we see favorable results. So here, this is a bit messier pattern, but we still at least have a contraction. We have a distinct down move, another up move, a distinct down move that is followed by another up move, and then we have a consolidation, which is pretty close to the top of the triangle. So we have a consolidation there. And looking at the volume, pretty big volume on this first bar, but then we see volume drop off a fair bit compared to what these last few days were. Again, not super low volume, but a nice overall pattern, and volume's definitely not increasing much on the pattern compared to what we'd seen recently. So a couple examples of valid patterns. Let's look at Zoom. This one was a little more squeezed in, but you'll be able to see we still have the distinct down move, even though this only took 1 or 2 days, depending on how you count this, but we started with the high up here and then a drop, so basically a 2-day move there, but it's a distinct move down, and then we have a quite distinct move up, and then a distinct move back down, and then a move back up. So at this point, once the price starts moving up, we can connect that high to that high, this low to this low, and see that the price is contracting. Then we start looking for a consolidation. This is tightening very rapidly. So this is right about near the middle of the triangle, so that's acceptable. We also have a very nice dropping volume. All red days, there was selling on these days. The price dropped 1.5% there, about recovered a little bit there, and then fell about 0.5% here, but all on declining volume. That's nice to see. And then we popped above it, and we've been running. So again, I don't know how this trade's going to end up, still in it, but that is a nice, valid, clean pattern, but a little bit much more compact than LVGO was. So you're going to see different contexts, different things that look a little bit different, but overall, those are the criteria you want to look for. So let's look at one where nothing's happened yet and what we need something to happen in. So at the moment, if you're eager to get into a trade, this may look like a contraction, because you can connect that to that, and there you have a tiny little contraction, similar to what maybe you think Zoom looked like. But if we look at this, we don't actually have the same criteria. We have a down move, and then the price has pretty much stayed there. We don't have really an up move, or we just have a down move and then a consolidation. So we don't know if this down move is even completed yet, because the price hasn't really moved up off this point. So this could still move down here, and it could still be a possibly valid pattern but we wouldn't be waiting for it, because we can scan for stocks that are actually exhibiting the patterns we want to see. Then we have another down move, then we need another up move, and then a consolidation. So that's what needs to happen in order for this. And I mean, it could be small too. Maybe the price does bounce from here. And we have a very tiny one. That is possible. But more likely this is going to make some price waves, and before we get these criteria, we're going to get something that looks more like Zoom or LVGO like we discussed. Here's another common one that people might make the mistake of, is they just see a few price bars that they can connect the highs and lows on, and voila, it looks like you have a contraction, and then we have 3 bars that sort of move sideways. Oh, that's a consolidation. No, we need those distinct price waves. We do not have distinct price waves in here. This is just a few candles of a bit different sizes. This is totally random, at least in terms of our trading method. Not something we want to jump in on. This, according to anything I've seen, this would not give me an edge in my trading methods, yet I know waiting for the type of patterns we're watching for does. So that's how you can kind of look at if a pattern's getting close. So on, let's go back to earlier. Maybe we can find another example. What else do we have? Again was a good recent one. So this one blew through the target very quickly. So again, distinct price waves. We have a down move, and sometimes it happens very quickly where we get the consolidation. So we have a down move. Make these a different color. Down move followed by an up move, which is going to happen in order to have another down move. That down move needs to be followed by an up move and a consolidation in the upper half of the triangle, or near the middle to the upper half. This one occurred just above or right at the top of the triangle. I should make that consolidation more accurate. So these 3 price bars is where momentum stalls a bit. Now, at this point, we have some pretty high volume on this bar, and then at this point, and especially this red bar, see that volume drop right off. And that's nice to see. So we have a nice little consolidation. The price tried to push lower, dropped 3.5% on that day, but on extremely low volume. So not a lot of people really jumping on that bandwagon to sell. And then the next day we have the breakout above the consolidation, so that would be our entry point. And it is sitting there. Once I isolate a pattern I like, I put a buy stop limit order just above the top of the consolidation. So the top of the consolidation in this case was $14.44. So in this case it's a $14 stock. 2 or 3 cents is probably good. So at about $14.47, $14.46, that's where a buy stop limit would go. The limit gives it a few extra cents, so maybe $14.50. There's usually lots of volume at those nice round numbers, so a good chance I can get in, or you could give it a few more cents if you want. That's where the limit portion of the order would go. That just prevents us from paying too high of a price if we have this consolidation, but then the next day the price gaps up here. I don't want to buy it up there. I want to buy it right near my consolidation. So I use a buy stop. The stop is what triggers me into the trade, so at about $14.47. And the limit is how much I'm willing to pay. So add a few extra cents to that. The higher the price of the stock, the little bit more of a buffer you can give it. But I wouldn't usually buy a stock more than about 0.5% outside of consolidation. If it's a really big mover and the thing can move 30, 40, 50%, then maybe you can pay 1% or maybe even 2% outside the consolidation, because that's not going to make a huge difference to your profit, and you want to get into that trade. But that's how these types of patterns are set up. So this was a quick 25% trade in a matter of days, and almost a 5-to-1 reward to risk, because this was a very small consolidation. So that very distinct patterns. Look at this here. We do not have a contraction here. This high is even this one. We're running upwards, then running upwards to this one. So this not a contraction. And here, if we connected these points, we don't really have a move down followed by an up move and a consolidation. So this would not be something we could trade. We also had earnings a few days away. So this, even though it kind of looks like the price is narrowing in a bit, it doesn't meet our criteria that we talked about on LVGO, where we have the 2 down waves, second smaller than the first, then a move up, then a consolidation. These need to occur in that order. Let's look at a couple ones that might trip people up. Something like this. The price has sort of contracted, but we don't have 2 distinct down waves. We have a down wave followed by an up wave and a consolidation. That's not a contraction. We need, at least my definition of the contraction is, we need at least 2 down waves. So this does not have a down wave. So yes, maybe we missed what looks like a nice pop to the upside. That's going to happen, but that's random. We need, based on anything that we can see, this wasn't going to happen. Or I shouldn't say it wasn't going to happen, but we need to trade strategies where we know we have an edge over many trades. This pattern, it's not identifiable enough to me to identify that it has an edge if I trade it over many trades. Because quite often on patterns like this, where the price is just moving, just chopping along, how do you know you're not at this point right here where the price is maybe going to move up a little bit, you get in, and it just keeps chopping along? What about this? Was that a valid contraction? This one was, because we have some actual distinct points where the price has dropped off. Downswing, downswing, pop-up consolidations. This would have been a loser if we had got into that one. This one would have been a winner. The price continues to contract, and we can start to see distinct downswings, a move up, consolidation there. So if you had gotten into this one, then downswing, downswing, move up. Yeah, so that would have been a valid one there as well. And it shows we're not going to win every trade, but that's also why our risk is so small. Our stop loss is just below that consolidation, so we're risking maybe a few percent, 4 or 5%, and we're only going to put in a portion of the capital we have in an account into each one of these trades. So if you put 20% of the capital from your account and you have a 5% trade, if you lose on this trade, you only lose 1% of your account. So we like to keep that risk low and get out as soon as the pattern fails us. And in this case, it failed us. We don't know if this is going to keep dropping. That's why we don't hold on to it. And then we wait for another valid pattern, maybe in the same stock, maybe in a different one. You'd also want to look at the volume. We did have a volume drop off quite nicely here. And what about this one? A little bit increasing volume on this one. So that would have been one. Nice to see the red days are low volume, especially this one where the price drops quite a bit. Low volume tells people aren't really involved. We have another low volume day there. So a couple low volume days in the consolidation. So that was a bit trickier one, especially over here. Again, make sure you're waiting for those distinct price waves. Well, let's look at one more example. And so GSX. Tiny pattern here, down move, up move, down move, up move, consolidation. Consolidation, very low volume, price runs higher. So that was a possible pattern. Definitely would have hit anything close to a 3-to-1 or probably even a 4-to-1 target. So there is about a 3-to-1 with the target just under 120. Would have even hit a 4-to-1 target up there for a 40% gain. So yeah, nice pattern there. And this one's a little bit trickier to spot because again, it covers a much larger area. And if I delete all this, maybe you don't see anything at all. And you need to train your eyes to see them a bit, just like anything else. Any sport, anything else you want to get good at, you need to train your eyes, train your body, get the muscle memory. So right now, if we just look at the last two swings, we're moving more in an upward channel. Not something we're really interested in. But sometimes if you scan back a little bit, or stand back a little bit, we see we have a move down, a move up, another move down, followed by a move up. So getting a consolidation here would have been quite nice, but I will take trades if they consolidate near the triangle. So if we did get a consolidation and it had really low volume, I would maybe consider this one. But it's one of those ones on the fence because we've technically already had a pretty nice breakout of this triangle pattern. Even though we didn't get the consolidation, we had the big breakout and it failed, so maybe that's not ideal. Whereas if it popped out and then consolidated right here and we haven't seen that breakout yet, then maybe that's something we'd be interested in if it started consolidating there right near the top of the pattern and then broke out. But just to show a little bit of how sometimes it's a little hard to see these patterns until you start training your eyes. And I definitely miss them, and I occasionally make mistakes. I put on a watch list this stock recently, and I was looking at just this here. And again, I got maybe a little trapped in just getting, there's no real distinct price waves here, no real consolidations, nothing that I can see. The price has moved off the bottom of this and moved up. So not a great thing on my part. So it's a matter of just trying to eliminate these mistakes as much as possible. And when you see them, that's the nice thing. We're always waiting for that consolidation. So, and the volume dropping off, that sort of thing. So it gives us a moment to usually pause once we've identified a contraction to see, is this really valid? And I put it on the watch list, and then I looked at it the next day, and I'm like, that does not meet the criteria unless you're super lax in how you judge it. But yeah, really, we don't have any distinct price waves here and no consolidation. This whole thing's basically a consolidation. So yeah, that was an error on my part. I sometimes do that, and it'll happen to you too. You'll sometimes draw something and then look at it after and just be like, no, that's not quite right. That doesn't have two distinct price swings. The price hasn't moved up off that second low. It hasn't really consolidated. And those are what give us pause. So hopefully all those things, talking about the errors I see most often, again, these are super common because people want to get into trades. I want to get into trades. So there's a tendency to try to see things that maybe aren't there, but by really showing what the requirements are of a contraction, then we can start to trade these more effectively, see them more effectively, scan for them more effectively. So there's a separate video on scanning for these types of patterns. You scan for them, then you just manually go through them and look for this criteria. And typically, once you start really drilling down to these criteria, you're not going to have a lot of trades, which is a good thing. You want the high quality setups, and you want to eliminate the rest that you don't know. Because any random price movement, if you don't know the pattern that you're trading, you can't test it, you can't verify that it has a advantage for you. So if you just start trading random patterns, your results are also going to be random. There are a couple rare variations that I notice I have put some examples of on the site. And one example would be this, where we have a very small contraction and the price consolidates on the bottom, forming our move down, but then the breakout of that consolidation basically aligns with the top of the triangle and the breakout higher. So in this case, because the contraction is so small, we have the down wave, but the breakout of the consolidation basically incurs or results in the breakout of or the next up move. So in this case, maybe you could wait for a consolidation near the top of the triangle, but that's going to be kind of unlikely. And then we'd have a double consolidation continuation pattern, so that would provide another entry. But in this case, the breakout of the consolidation basically equates to the breakout of the entire pattern. down move, up move, down move. We're still below this recent high, but we're near the top of the pattern. This one also is a bit of a variation, because why I allowed this one is while I've drawn this line here, we had the drop, the move up, we had a little bit of a drop here, so we could have connected this to that line there. I did not. I was waiting to see how this developed. We had a consolidation, and you could have traded the breakout of that. I didn't really get interested in this one actually until we had this move down. So this was where I connected the swing low to. We had this move down, and then it breaks above the top of the consolidation. So that would have been the entry point, because the price didn't move down much, just like a little blip below, kind of stopping out anyone who had gone long in that quite a few days stretch, probably about 10 days, where the price moved sideways, it dropped down, and then popped up. So this was a false breakout. It tells you if the price makes a drop but then quickly recovers back above what you were thinking was the initial entry point, that is usually a pretty strong sign that things are looking good. So I just wanted to point out that you'll sometimes see slight variations of this. I'd stick to the main template we discussed by waiting for those two distinct price swings when you're first starting out, and only kind of venture into some of these other ones once you've really kind of mastered those, because these ones are a little bit harder to identify which ones are more likely to break out, and that'll just come from with practice and seeing thousands of charts. And as you scan and scan and scan each week and week out, you'll start to see some of these little variations, and you may decide to include them. So I just wanted to point that out, because I know I've definitely put some examples places, and I know that it might have been confusing if I didn't clear that up. So we still have the basic parameters, but we just have a couple little nuances that may look slightly different. But even at this point here, we had the move down, move back up. So this was a valid triangle. I've just drawn the line a bit differently based on when this trade actually occurred for me. And then again, this one, the consolidation breakout, ends up pretty much being the top of the pattern. So yeah, a couple variations, so just wanted to point those out. So I hope that helps you out. That was a lot of information to absorb, but hopefully it clears up any confusion that was involved in these patterns and helps you find them better and helps you trade them better. Until next time, happy trading.